Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that score a 10 out of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that score a perfect 10, and that of course is on our TipRanks Smart Score, which looks at 8 unique different factors and measures a stock's likelihood to outperform the overall market. So today we're going to take a look at these companies, what it is that they do, and of course how Wall Street is weighing in on the stock's future potential as well. Just before we get into that, we are now having our Valentine's sale this week as well. So you can unlock 30% off our premium and ultimate subscriptions or our smart investor newsletters as well. So head on over to tipranks.com to take advantage of those savings now. Now let's get right into our perfect 10 stocks. First up is a company called AllianceBerstein. Their stock trades under the ticker AB and is currently priced just shy of $34 per share. Now, over the past year, they are down 9% overall, but in the last 6 months have climbed up 15%. Their 10 out of 10 Smart Score does come with bullish blogger sentiment, insider transactions worth over $2 million in the last 3 months, and very positive crowd wisdom. AllianceBerstein is a financial services company. They are an asset manager that works mainly with institutional and high net worth investors, but also with some smaller retail clients as well. Based out of Nashville, they finished 2023 with $725 billion in total assets under management. They operate 3 distinct business segments with their eponymous asset manager, a private wealth management segment, and a research segment. They just reported their Q4 and year-end results last week on February 6th. They came out with both an earnings and revenue beat, with revenue growing 10% year over year. For their Q4, they reported earnings per share of 77 cents, coming in ahead of the analyst estimates of 63 cents per share, and they reported revenue of $1.09 billion, which, like I said, grew 10% year over year, but also beat expectations by over $232 million. Following that earnings report, we did hear from a 5-star analyst at Bank of America. He notes that the AB stock has been a solid performer in the past several years, saying that their prior long-term outperformance has contributed to an over 2% organic growth rate over the last 5 years, which tracks better than most of their peers. This supports their more bullish outlook for their fixed income flows, which also align with their industry thesis for fixed income reallocations. The AB stock does just have 5 current analyst ratings, but comes in as a strong buy with 4 buy ratings and 1 hold. The average price target comes in at $39 per share, which would be an upside potential of nearly 15%. Down below, we can see our 5-star analyst here, giving it a street high price target of $50, which would be an upside of 47%. On the low end, we do have a hold from Jefferies with a slight downside of nearly 3%. Our second 10 out of 10 stock is Savers Value Village. Their stock trades under the ticker SVV and is currently priced just above $20 per share. Overall, in the past year, they are down 14%, but have been climbing up more recently, growing 71% in the last 3 months. Their outperform rating does come with bullish blogger opinions, some increased insider activity, and strong fundamentals. Savers Value Village is the largest retail thrift store chain in the US and Canada. Hitting the public markets last summer, they are a for-profit chain, differentiating from other well-known thrift chains such as Goodwill. They're based out of Washington State and operate stores across the US, Canada, and Australia. Now, their last reported quarter was back in November, and it did fall a bit short of expectations. They reported revenues of $392.7 million, which was a few million short of estimates, and earnings per share of 16 cents did fall 3 cents short. However, they did release preliminary sales numbers for Q4 at $382 million, which did grow 4% year over year and was well ahead of estimates. And with that preview, we did have an analyst from Jefferies reiterate a buy rating. He said that we believe the tone from management remains upbeat following the company's solid preliminary 4th quarter sales results, and we continue to see an attractive long-term growth opportunity. To this end, the SVV stock has a substantial unit growth opportunity and strong secular tailwinds. Combined with a track record of consistently positive SSS and stable margins, we believe shares are significantly undervalued at current levels. With 4 current analyst ratings, the stock does come in as a unanimous strong buy. And the average price target of $24.25 would be an upside potential of nearly 20%. Down below, you can see those recent ratings coming in January. On the low end, we have a buy rating with a slight downside of 1% and a high-end price target from Jefferies with an upside of 48%. And for our third stock, we're moving over to the biopharma world with Axsome Therapeutics. They trade under the ticker AXSM, currently priced at $98 per share. They've seen some impressive growth of 57% in the past year, climbing up 65% in the last 3 months. Their 10 out of 10 Smart Score does come with increased hedge fund activity and very positive crowd wisdom. They focus on developing treatments for diseases of the central nervous system. These CNS diseases are a class of diseases that are typically difficult to treat and frequently lack effective therapeutic agents. This gives the company a rich field of targets for drug development and a potentially deep patient customer base. The company now has 2 approved drugs on the market, and its clinical pipeline features several late-stage data releases and trial commencements. The company is shifting from a pure research orientation to a more commercial bent. They'll be reporting their latest quarterly results soon on February 20th, and this does follow an earnings miss back in November. For their fourth quarter, analysts will be anticipating a loss of $1.15 per share, which is narrower than last year's. This follows their Q3, where they reported a loss of $1.32, which was 12 cents wider than analysts had anticipated. The company did report third quarter product revenue of $57.8 million, which did grow 244% year over year. An analyst from RBC just initiated coverage on the stock a few weeks ago, coming out with a buy rating. They said that overall, we think the company's successful launch of Auvelity, stable cash flows from Sunosi, and underappreciated pipeline optionality make for an attractive mid-cap biotech with a floor value set by the commercial products and near-term phase 3 launch catalysts having the potential to drive additional share appreciation. Axsome Therapeutics does come in as a strong buy with 11 current analyst ratings, coming down to 10 buys and 1 hold. And the average price target of $128 would be an upside potential of over 30% from current prices. Looking at our detailed ratings here, on the low end we do have a buy rating with a downside of over 8% and a high-end price target coming from H.C. Wainwright with an upside of over 83%. So that is a quick look at 3 stocks scoring an outperform rating on the TipRanks Smart Score and also coming in with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these 3 companies in the comments down below. I always appreciate hearing from you guys. And of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.